Hi, this is Jeng, and today we're doing a DFW sort of Q1 2020 market update. And so some of these videos are more high level. This one's going to be super granular. So let's just jump right in. So my background: born and raised in Houston, done about 1.5 billion in commercial real estate transactions. Half of that as a loan underwriter, half of that as a loan originator. Really, the last 5 years been focused on multifamily loans, originated close to 800 million across 125 properties, and also invested in close to 6,000 units across properties in DFW, Austin, and San Antonio. And so let's jump in. First, I want to just touch on April rent collections, sort of end of the month here. And everybody that I've talked to, sort of A, B, C here in Texas, they're anywhere from like the A stuff is 95+%, B's are the same place, and then C's are still have some work to do, but probably 5% off of where they were. NMHC did their survey, and they're essentially a couple percentages below where they were sort of middle of the month. So I think everyone's going to be 90 plus in April, and now the question turns to May. So we'll check in on May, maybe a week into May. So I wanted to start with this chart and just sort of give you some historical perspective on sort of price per door and where DFW has come. So we've seen this chart before, but essentially, on the lower end, it was really like 20 a door, all the way ramped up to 70 a door here in DFW. And then the mid range sort of stayed around that 50 to 70 a door and ramped up to 100 to 150 a door. And the A stuff on average, got up to 170 a door here in DFW. So I want to give you some price points just from historical perspective. And then here's on the Q1 update. So let's say there's approximately 85 properties that sold in Q1. And half of those 41 were portfolios. So Harbor Group bought a very large portfolio from Aragon, and then the Casero Group also bought a large portfolio. So those deals are a little bit harder to get into. We'll talk about them at a high level, but then we're going to focus more on the conventional sales, the individual properties, and try to dive into them. With sales, it's hard to get the actual sales price unless you were the broker involved in that deal. And most people aren't willing to give that up. So we're going to focus on sort of how these deals were put together in terms of the loan, and then sort of rough pricing. So here at a high level, this gives you an idea, sort of price per door, price per square foot. You can see on the conventional sales, at the top end, discretionary A plus stuff, that was close to 260 a door. The B stuff was 110 to 150 a door. And then the workforce was right around 90 a door. And then you see the average per square foot. So on the A stuff, super high, 300 a foot. B stuff 130 to 170, and then C stuff about 117 a foot. So just keep those sort of ranges in your head while we go through these. And I thought this was neat. This was sort of broken out by location, and you can see sort of the green is where the A stuff was, the B stuff, and C is sort of the yellow and orange. And so, what we focus in on more the sort of B and C, you can see a lot of B and C in sort of Carrollton, Garland, Irving, Arlington, Grand Prairie, sort of those markets that have the 70s, 80s, 90s product. And you can see the A stuff is really, Plano, Frisco, Uptown, a little bit in Arlington for some of the new builds, but majority of the concentration a little bit in Irving, Las Colinas area. So you can see where the A stuff is here in DFW compared to the B stuff. All right, so here's my high level summary before we get into the details. So the A plus stuff, average units was about 335, built in 2006. Average rents were about $1.53 and $1,400 average rents. And the debt sources were really life insurance, Freddie Mac, conventional debt funds. And then on the B plus stuff, A minus B plus stuff, same average unit size, which is interesting. And then, this was a combination of REITs and syndicators, and average rent $12.95, rent dollar per square foot was about $1.46. On the B side, units come down 239 units on average, average built 1983. These were mostly syndicators, combination of Fannie, Bridge, debt funds, Freddie SBL. Average rent is $1,000, and then dollar per square foot was $1.21. And then on the C side, 142 units was average. 1976, this was almost exclusively syndicators. Similar debt structure, Fannie, Freddie, SBL, debt funds. 893 average rent and $1.19 rent per square foot. So let's jump into the A side. So I mean, mostly these were all REITs. I guess this one slipped in here from 1996, some of the older properties. So let's talk about the REITs. I mean, Harbor Group bought a portfolio from Aragon, and Livcore bought a portfolio from Cortland. And you can see that they did just very large portfolio loans. So Livcore used Goldman Sachs to do essentially like a 5-year bridge note for $948 million. And then Harbor Group did a Freddie Mac portfolio loan for $645 million. So those, it's really hard to get any sort of guidance, sort of property by property on those. But some of the individual syndicators who sort of have bought in this size is Ashcroft, which is run by Joe Fairless and Frank Rossler. They bought a deal in Irving. I would say that's more of a A- deal, but slipped in here. And then Nightvest, which sort of came out this last recession. They bought a nicer deal here with a life insurance company as the debt. All right, let's move over. It's sort of A-, B+. Casero Group out of Austin bought, I think, close to 1,200 units here in DFW, all in DFW, from Atlas, and they used the Freddie Mac conventional portfolio loan on this one. And you can see there's more syndicators that are creeping up here. Harbor Group, same stuff on the Freddie Mac. And then our friend John Montiero, his deal slipped in here, Jordan Creek with Freddie Mac loan. And let's see. So average on the A- B+ stuff is average rent was about $12.95, and rent per square foot was $1.46. All right, let's jump over. So this is really where most of the deals that I focus in on is sort of your B, B- and C. So let's start. Sunset Heights, that was a deal listed by Jacob Anderson over in Southwest Fort Worth. Daniel Canterbury bought that from Darwin, did a bridge loan on that one. Ventana was a deal over in Carrollton. Shane and Prashant bought that deal with Fannie Mae loan assumption. Avenida was a deal listed by Nick Llewellyn and Bart Hoover over in sort of East Dallas. We did that loan with a Fannie Mae lender. And then Oakwood was a deal, 60 units over in Arlington. That was a Freddie SBL loan. And let's see, on the B side, a couple more here. So Wedgwood was a deal, Southwest Fort Worth, that I financed with a Fannie Mae loan. And then that was a portfolio loan. So we'll see the other one on the C side. And then Ridgemont was a deal that Satya bought with Freddie SBL loan in West Fort Worth. And a couple of these other ones to mention, Terraces on the Parkway. Bouvon bought that deal, Fannie Mae loan. Let's see if there's any more. All right, and then on the C side, Monterey was a deal. That was a partnership with some of my former GE guys, and we used the Fannie Mae loan on that deal. And let's see, Tierra del Sol, Dante bought that deal with Fannie Mae loan, and Villas del Sol was the portfolio loan that was part of Wedgwood earlier, and that was a Fannie Mae loan. So you can see most of these C-class deals, average rent about $8.93, and then $1.20 rent per square foot. And so, looking at sort of in summary, you could see how the debt sources change, the buyers change, and then just based off of where the rents are, you can see sort of starting at 1,400 down to 1,300, 1,000, and then 900 on the C side. And then, the debt really at the top of the stack, sort of the A+ stuff, you're really looking life insurance, you're looking Freddie Mac conventional. Bridge, you can see is competing in across all asset classes. And then, but you can see really syndicators take over sort of in that B and C space. And so that's where a lot of people that I work with have been focusing on. Wanted to give you some historical perspective, sort of looking back. This from CoStar. You can see, I think, if we're sort of here, sort of, '07, 2020 is probably going to, dip down similar to '08, '09 levels, just based off the number of transactions that we're seeing. And I'm hoping it comes back a little bit faster than 10, 11, 12 did in terms of transaction volume. And here was an interesting chart that I saw on rent growth. So Q1, I mean, January and February, people were probably fine on rent growth, but I think March, April, May, I think most people are just doing, flat renewals or declining their rent slightly. But this shows a chart, sort of historical rent growth in DFW, and you can see sort of 2006 all the way to 2011, average rent was about 765 to 795, so it hadn't moved much. But then really, starting 2012 all the way to 2020, it really ramps up, going from 831 to $1,200. So close to, 60% change in rents across that platform. So I'm hoping that rents maintain some level or sort of reestablish this level and then go up from here. But we'll just have to see on how long this recession lasts on the rent growth. And so if you like this video, definitely subscribe to the YouTube channel, like this video, and let me know if there are other metrics you would want to see on these sale comps, whether it's property management company or, we have a lot of data on these. So just let me know in the comments maybe. And, complete, if you want to set up some time to talk to me about buying, selling, refinancing your next multifamily deal, send me an email, give me a call. And you can see all my loan closings at txmultifamily.com. Thanks a lot, guys.